Session 44 of Unit 4 of Taxation of 5th semester BBA of Mangalore University. Let us study some of the problems on computation of total income and tax liability of companies. This is a problem for 8 marks asked in November 2015. Ping Pong Limited, which is an Indian company, shows income of 10,30,000 for the previous year ending March 31st, 2020. During the previous year, it had donated 1,50,000 to NDF, National Defence Fund, and 1 lakh to the National Illness Assistance Fund by checks. The income included a sum of rupees 50,000 being dividend from another Indian company. The company distributed dividend to its shareholders on 25th September 2019, rupees 1,50,000. Compute the total income of the company. Now let us see the solution. Computation of total income. Net profit is given 10,30,000. Add dividend paid 1,50,000. So it is 11,80,000. Now from this, less dividend from Indian company. This is exemptable income, but it was included in the net profit. So we are deducting it. So the gross total income is 11,30,000. Now less deductions under section 80G. NDF at the rate of, it is 100% deduction. National Illness Assistance is also 100% deduction. So the entire amount is considered. It comes to 2,50,000. So if you deduct this, you will get total income 8,80,000. This problem is for 20 marks, which is asked in November 2015. From the following information, compute the tax payable by Kotaria and Company, keeping in view the provisions of MAT under section 115 JB for the assessment year 2021. So MAT, minimum alternate tax, is charged on book profit. Therefore, first we have to find the total income and another statement to find the book profit, and then compute the normal tax as well as minimum alternate tax. Now profit and loss account is given. So first we have to, from the net profit, we have to find out the business income, and thereby we will find the total income. Let us see the computation. Other information is given here. Computation of total income. Net profit, add expenses disallowed. Securities transaction tax, excess depreciation. Here we need to see the adjustments. Proposed dividend, income tax. So we will add these items, and then less long-term capital gain, interest on government securities. These are not under the business heads. Then less brought forward unabsorbed depreciation. So here we get business income. So for the business income, we shall add long-term capital gain. Here as it is mentioned, it is exempt, so it is nil. Income from other sources, interest on government securities 50,000, and gross total income comes to 10,50,000. As there are no deductions under section 80, this amount itself will become the total income. Now next we have to compute the book profit. Computation of book profit. Net profit, add proposed dividend and income tax, less brought forward loss or unabsorbed depreciation, whichever is less. So here we get the book profit. Now we have to compute the tax liability on total income at the rate of 25% and on book profit at the rate of 15%. Here we shall see computation of tax liability. Tax on total income at the rate of 25%, 2,62,500. On 2,62,500, health and education cess at the rate of 4% comes to 10,500. So tax liability, normal tax liability is 2,73,000. Now tax on book profit on 14 lakh rupees at the rate of 15%, 2,10,000. On 2,10,000, 4% health and education cess comes to 8,400. So the tax liabilities, that is minimum alternate tax, is 2,18,400. Now normal tax is 2,73,000. Minimum alternate tax is 2,18,400, whichever is higher. So the tax liability is 2,73,000. These are the references for further problems, you can refer them.